Welcome back everyone to yet another video of the bootcamp. Today I believe is day 5, right? So today's video, as you can see by the title already, I'm going to be going over what is a breaker structure. So in terms of that, there's going to come across a title of what is the difference between liquidity sweep and a breaker structure. However, today it's just a breaker structure. So it's going to be hard for me to kind of move around liquidity inducement stuff as well as breaker structure. So I'm going to do as best as I can. Stick around for the whole video. Discord is down below in the description, so keep up to date. I've just today released a free course, so there are different videos from the bootcamp inside of the Discord. So I'll see you boys on the charts and in the Discord. Alright, so as you all know, if you do not know me, I like to do my drawings before I get onto the actual chart. So what I'm going to do is I'm going to do some drawings on what to expect and how to kind of predict a breaker structure. Not really how to predict. Predicting a structure shift is more, you can predict a liquidity sweep very easily, which is going to be 2 videos after this video. I'm not too sure. That's probably the most important one as well, so I'm not going to go too much into that. But in terms of breaker structures and using it as a confirmation for entry points, finding your daily bias and all that sort of stuff, I'm going to be showing you right now. So, to the drawings, like I was explaining, what I'm going to be showing is, when are you going to be looking for breaker structures, right? You're going to be looking for breaker structures if you're looking for your bias, right? So when you're looking for your bias, you want to be looking at it as like an intention, a story. You want to have a picture with a story. You want to be able to say, in order for price to continue or to do whatever it needs to do, it needs to come down and, take some type of liquidity, etc. So that is how you build a story. I'm going to do a video a bit more on top of that. However, for now, I'm going to be showing you how to use breaker structures in terms of an entry confirmation, right? So when it comes to an entry confirmation, what you're going to be looking for is there's different stages of the market, right? Are you in a pullback? Are you in, the trend? Are you in the intention? What? So if you're looking for a continuation trade, right, you're going to be in the market where it looks something like this, right? It's not going to be exact. So this is what a continuation trade would look like, right? So continuation trade, right? We've got new highs being created, right? I don't know why I stuttered and couldn't speak. These are our new highs, right? So price is currently trending. So we are looking for buyers to the upside. So what do we need to see happen, right? I'm not going to go too in detail because obviously we are quite towards the beginning of the bootcamp. However, we're going to need some type of liquidity before the entry no matter what. And I'll tell this to everyone 1,000 times, right? You need to have liquidity before the entry. If you don't have liquidity before the entry, you're going to be manipulated. You're going to be taken out of the market instantly. Manipulation is a point where price is, trying to fake the sellers or buyers into the market so that then they can take their stop losses. So you'll end up being our liquidity, right? So here, without going too much into detail, this is our first and only point of liquidity. This is the only low inside of the range, and the range is from the low to the high, right? So we're trading price anywhere in between this level, right? Anywhere in here. So our point of interest, right, is going to be this demand level down here. This is our order block. So an order block is a candle where you can take positions off of. I'm going to be doing a video on that, of course, as well. However, for now, what I'm going to be showing you is how to use a breaker structure for your entry confirmation. So when you're talking about entry confirmation, we look at it as an entry protocol, right? So an entry protocol is we want to see the higher time frame, POI, get tapped into. So let's say we're on the 30-minute time frame right now, right? We're seeing the 30-minute drive into our demand. On the 1 minute, what we're going to want to see is some type of shift. So if I highlight, let's say this zone, right, and then I'm going to draw this over here. So let's say this circle is this, right, but this is the 1 minute. So that's our 1 minute time frame. So let's say this is our demand zone around the bottom, right? On the 1 minute, instead of entering on the first tap and having no confirmations, right, we've got no hesitation within the market. There's no weakness, there's no nothing. So there's no reason why you should be entering on the first tap. If you enter on the first tap, you've either got 30 seconds till you're going to hit stop loss, or you're going to accumulate. If you don't break any type of structure, you know, you could accumulate, be in profit 1 to 1, and then you still hit the stop loss, and you're questioning, you know, why does it not go up, right? So let's say we've got price coming down, right? What we're going to want to see is we're going to want to see a break of structure. So on the 1 minute, we're going to want to see this high get broken, because if price doesn't break this level and just sweep some type of liquidity in here, there's no reason for it to buy. There's no reason why it shouldn't continue to the downside. Yes, it could potentially create a new entry down here, but that's about probability. You know, there's different probability within trading. You know, they don't have to be one exact level of interest, right? So you can then take the sell down here, but that's the whole point with being patient. If you waited for here, you wouldn't have taken a silly loss and then waited for the new entry. If you'd waited and we had price shift above this level, creating a market structure shift, then we would have seen price take the liquidity, which is our entry confirmation, which will be the other video. However, we're just talking about breaker structures, right? So using this breaker structure gives us an indication that price is confirming the validation of this level, right? So ideally, as long as we've got liquidity inside of this new range, price should be buying from here, so from the new demand. So that would be our entry here with our stops just below. So that is the most ideal entry, right? If there was no liquidity, just a quick tip, I don't want to ramble on too much. If there was no liquidity in this range, so from, let's say from the high to the low, it looked like that and there was no liquidity, we would probably see price manipulate people to buy here. So in that demand that we're coming down to buy to, we're going to see some type of manipulation, and then we'd see sell off, hit your stop loss. If there's no liquidity, this previous low is your liquidity, so then we'd see the move. That's just a tip to take into account right now. Obviously, you've got to be patient and wait for the liquidity inducement video. However, moving on from that, I'm going to be moving on to the charts now. So if we look at this trade, for instance, no, it might not be that trade. If I try to find an example now, if we look over here, as we can see here, right, price, what the hell? Price continues to the upside, right? We're in an uptrend. So we've got the trend, we've got the retracement, trend, retracement, trend, retracement, so on and so on. So what are we looking for? We're looking for a point of interest. So the intention here before London Open is we see some type of sweep. So we want to see price push beneath that liquidity in order for it to continue to the upside. But in order for it to continue to the upside, we need to see some type of point of interest be tapped, right? So we see price tap into our point of interest. So this is our little order block. We've got that whole area marked out. That is our point of interest. So now to confirm that entry, what do we need? We need to see the shift. So we've got on the lower time frame, on the 1 minute, we want to see price break above this, and then we want to see liquidity. So what we're doing on the 5, the 15, the 30, the 1 hour, we want to be doing on the 1 minute with the exact point of entry. So liquidity, we've created a new high. So once we've broken above, we've seen that it's broken structure. Now what do we wait for? We wait for a liquidity sweep and a point of interest. So the liquidity's here. Here, there's no clean entry for me. Whereas if you jump to the 3 minute, which is all about taking advantage of every time frame, you can now see that there was, in fact, a 3 minute order block that had been unmitigated, right? So that there is our level. So your entry could have been anywhere underneath that level. So we tap into the 3 minute order block. So if I mark it out, the 3 minute order block looks something like that, right? So that's our order block. Price can push anywhere in here. Doesn't matter if it's here, 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 or here. Going to be valid. And that's why you be patient. So with being patient, it's still aggressive, but as soon as it taps into it, we see price push away with it some with quite a lot of momentum. Our entry is going to be anywhere here. So entry here, stops to here, and I'll take profit to previous high or even further, right? And the whole point with being patient for these entries, we now know that the direction is most probably accurate, right? We know that we're most probably going to see that high get broken now. So even if this entry doesn't, come into place, even if we just target previous high, that's still going to be what, an 8% trade. So let's say this hits stop loss, right? and the entry is down here. We've taken a silly little loss. No, let's take that back. It's not even silly, it's valid. We've taken a valid loss, you know, no questions about it. We've come down here, there's a new entry, catch that, we make 7% instead of 8%. So, you know, being patient with this strategy and approach, you're going to become very successful in a matter of time. So I'm going to leave this video here. The next video I think is going to be on advanced market structure. I wanted to do that after the breaker structure, just so I can go a bit more in depth within the advanced structure video, so you boys can understand what I'm talking about. And then after that, I'm probably going to do a bit of a, you know, a personal video on different approaches within the mind and all that stuff. And then I'm probably going to move on to liquidity, because I know liquidity is what everyone wants. So I'm going to leave this video here. Join the Discord. There is also a new section where you could submit your charts, so I can see your charts and preview them in private, and I can give you analysis, you know, help and reasoning behind your silly losses, whatever. I'll see you boys in the next one. Don't forget to comment, like and subscribe. Do all of that stuff.